Creative Generosity, How to Bless Yourself, Your Family, and Ministries You Love. My name's Doug Miller. I'm an attorney and gift planner here at Ozark Christian College. I get to help people give through their wills, trusts, life insurance, retirement accounts, appreciated stock, and other types of property. Part of my job responsibilities include teaching people about charitable giving opportunities. Today, I'm glad to discuss some creative generosity opportunities with my longtime friend and experienced gift planner, David Duncan. David, please tell us about yourself.
Thank you, Doug. And hi, everybody. It's great to be with you today. We are going to talk about some creative generosity opportunities. I know many of you here are, like Doug and I, in the business, so to speak, of helping others, and others watching today would be saying, hey, I'm looking for some ideas myself. We need to start by just saying, if anything we talk about today triggers a question on your part, toward the very last, we're going to put our emails up on the screen, but either Doug or I would be very happy to do our best to answer questions for you. So really appreciate you investing some time here today. If I were listing my bio, I guess for this audience, I should probably start by saying I'm a 1981 graduate of Ozark Bible College.
Absolutely.
And now Ozark Christian College. So I think about this often, though I am not particularly working in the field where my degree led me, which was sacred literature at the time. I use every day in my work the skills that I was taught here at the college. So very, very thankful for my education at Ozark. I work with nonprofit ministries and churches now, and the primary goal is to help Christian stewards make decisions about who they want to support, who they can take care of through their financial means, and how to do that in a way that their family gets what they want their family to have, and the kingdom gets what they want the kingdom to have, and if at all possible, to reduce the tax burden. So that's the work that I get to do through CDF Capital Foundation today. It needs not be explained that the last couple of years, Doug, have been really topsy-turvy for people. I'm trying to stay away from all the cliche words that we've heard because it has been what it has been. And what I'm sensing in my conversations with Christians around the country, both ministry leaders and individuals, is that there's just a lot of things that feel out of control. So my hope today is in these few minutes we have together that you can see there are at least a few things that we can control, and where we invest some of the financial resources God has given us is one of those things. So that's my hope today. We believe Proverbs 11:24 to be very, very true. And this is the Message version. The world of the generous gets larger and larger. The world of the stingy gets smaller and smaller. You wouldn't be here today if you weren't looking to impact the world and to find your own world getting larger and larger in the best sense. So happy to be here, and thanks for the opportunity.
Well, we're glad that you're here, and you've prepared a little fact sheet called Short-Term Generosity Opportunities. Yes. Begins with a great quote from Mark Twain. It says that I was seldom able to see an opportunity until it ceased to be one. So what are some of those short-term generosity opportunities that we have this current year?
So being in Missouri, we have to love to quote Mark Twain, right?
Absolutely. Native Missourian.
Yeah, love the Mark Twain quotes. But so there are some things that are going to expire that have been limited time. If we were to go ahead and look at how they got here, those of you who are viewing, you can see on the screen, early last year, 2020, the CARES Act was passed, and it was Congress's direct response to the recession that was brought about by the COVID-19 and the response that the nation had to it. It was reaffirmed many of those things, slight changes at the end of last year. But in addition to that, we're in a historically low interest rate environment, which was pre-pandemic, but has been exacerbated or at least extended by the pandemic. And obviously, we're wanting to make a big difference and impact the world for Jesus. So these short-term things are things we need to know about as Christian stewards and what to take advantage of. So a couple of those that I want you to be sure to be aware of. both those of you who are here to learn for yourselves and those of you who are helping your friends and partners in your ministries and nonprofits. After the 2017 tax bill, where the standard deduction on a tax return was effectively doubled for a married couple and for single individuals as well, it meant that more than 9 out of 10 taxpayers were no longer itemizing on their tax returns. Now, those of you who itemize know what that means. You have mortgage interest you're allowed to deduct. If you have a business, you can deduct your business expenses. We used to be able to deduct medical expenses and some other things, but those floors have gone up to where many people can't do that either. But the biggest thing that gets itemized often on a tax return are charitable gifts. Well, if your standard deduction is large enough that your itemizations don't equal that amount, you no longer itemize, which in effect means your charitable deductions aren't on your federal tax return deductible. Now, you're still getting the same tax relief because the standard deduction covers it. It's just that the perception for many people was, well, I just won't give anymore if I can't deduct it. And the philanthropic world lamented that tax change, saying that charitable giving was going to go down. And there's some evidence that perhaps that did in fact happen. Well, here's the good news. In the short-term opportunity, the CARES Act made it possible for every individual this year, regardless of itemization, and this is important to those who don't itemize, you can deduct on your tax return $300 of charitable giving. And if you're a married couple, you can deduct $600. So if you've been giving to your church or some other ministry that you love and care about, don't forget to claim that deduction. Now, generally speaking, if you itemize, you're in the lower tax bracket. So it's not a huge savings, but hey, who's not for a $60 rebate from the federal government, right?
Well, and you've got an expanded charitable deduction, standard deduction. Plus you're putting this $300 to $600 on top of that.
And so you bring up the second thing that does expire, and that is in a normal tax year. I had a really fancy chart on this, and I opted for the webinar to not put it on it because it can be really confusing in person. But anyway, in a normal tax year, Doug, an American taxpayer can deduct up to 60% of their adjusted gross income from their federal income taxes. So nice round numbers. If your adjusted gross income is $100,000, your maximum cash deductibility for charitable gifts is $60,000. But last year and this year, through the CARES Act, Congress has eliminated that cap. So it's literally possible, perhaps for the first time since the income tax came into being in 1913 or whenever it was, an individual or a family can give enough cash gifts to completely eliminate their federal income tax burden. Now, that implies we have enough cash to do that, and it's an exceptional opportunity if you do. Quick story. Worked with a family who came to one of my seminars a few months ago, and they said, well, we want to follow up, and it's pandemic, so we followed up via Zoom. But when it was all said and done, they called the ministry rep to lunch and said, hey, we saw that in the seminar and in the conversation, we can deduct 100% this year. So you should expect an extra $1 million this year.
Wow.
And it's happened.
Yeah.
So now that's an exceptional story, but
Sure.
it might be that someone with us today has that opportunity.
Yeah, absolutely. So again, they have limits on that because they want to make sure they get taxed on that other 40% on a normal year.
Correct.
And
Federal government, yes.
This is a short-term opportunity in that it's still this present tax year, December 31st of this year, that 100% goes away. So you've got just a short time to act on
Completed gift before midnight, December 31st.
Okay.
And for cash giving, that just simply means delivered or on a credit card or posted marked at the post office.
Absolutely.
So,
So what are some other short-term giving opportunities that will expire this year?
Yeah, so these expire every year. So these are not related to the CARES Act, Doug. But a couple of things that I would encourage people to think about. I see this often in my estate planning work. I don't know if you do or not, but every year, every individual taxpayer has the ability to give another individual up to $15,000 of value and assets. and neither of them has a tax implication. So the giver doesn't have to pay a gift tax and the recipient doesn't have to pay an income tax. And if you're married, each spouse can do that for that individual. So you can effectively give $30,000. I routinely work with families who are saying, well, if I can do that, I might start giving away some of my wealth to my grandchildren during my lifetime. And $30,000 a year can go to them with some kind of wink at me and say, with the threat that you'd better invest it wisely, or, this is not.
There won't be one next year.
Yeah, no vacation to Tahiti on this thing, guys. Is pay your mortgage or something like that. So that's an every year. If you use it in 2021, you can do it again in 2022. So the annual exclusion. Now, when you and I started, the annual exclusion was probably $9,000 or $10,000.
Right.
So it gets indexed for inflation, and each time it ratchets up to the next level, $1,000, it will go up. So maybe 2 years from now, it'll kick up to $16,000, but this year, $15,000. Another opportunity that we have on these short term has to do with those of you who have individual retirement accounts. Now, unfortunately, we've not gotten Congress to apply this to 401ks or 403bs or other forms. Right now, these rules are only for IRA accounts, but they're really helpful for those who choose to do charitable gifts from their IRAs because honestly, a lot of individuals end up with a bulk of their assets in an IRA. So on the screen, you're seeing a slide that talks about the RMD. Now, lots of, IRA, RMD, lots of initials. You'd think we were the federal government the way we're using these, but IRA, individual retirement account, RMD, required minimum distribution. So the required minimum distribution is a rule in the law that says when you reach age 72, you have to start taking some money out of your IRA. And the reason being what you mentioned before, the federal government does need money to operate. So you'll see at age 72, if you had a $100,000 IRA, you'd have to withdraw over $3,900. That's not optional for you. You have to take that out. And that increases your taxable income accordingly. By the time you're 90, you have to take out $8,772. That increases your taxable income, which means the federal government receives some income tax benefit. There's a beautiful rule that allows for what's known as a qualified charitable distribution. I want to use the initials QCD. So with IRA, if you have to take an RMD, use a QCD. Then that's bad enough. I'll stop there. Qualified charitable distribution is made possible to all IRA owners who have reached at least 70 and a half years old. Do you know why the rule was put in place 70 and a half years old?
It sounds like some sort of compromise, but I don't know.
I don't either. I was hoping you knew. Nobody can give me an answer to that.
It sounds like something that comes out of Congress at the end.
It's a congressional thing.
What would have, someone wanted 71, another one is 70. And
we don't know the answer to that. But 70 and a half is when it kicks in. What you can do is you can contact your IRA custodian. In my case, it's Edward Jones. I'd contact Edward Jones and I would say, hey, take this much money from my IRA and distribute it directly to, and I would name a charity, whether that's Ozark Christian College or your local church or whomever you choose to benefit. It can't come to you. It has to go directly from your custodian to the charity to qualify as this distribution. What many individuals who have reached that RMD age do is if their charitable giving normally reaches that amount, instead of giving cash, they use the IRA. And especially if you're not able to itemize your tax deductions. Because if you itemize, you might get a similar benefit by deducting the charitable gifts. If you can't itemize, it's income you don't ever have to claim. So you get the same benefit of a deduction even though you can't deduct it. So on the screen are some of the rules. You can't exceed over $100,000 a year. It's not taxable to you. You don't get the deduction, but you get the same net benefit. And the biggest aspect of the benefit is the church or the charity gets the money. And so what do you do with the cash that was in your checking account you'd been writing charitable gifts with? Use it for anything you like to. Those of us with grandchildren,
So we're talking about traditional IRAs that are taxable.
Not a Roth.
When the person pulls it out, not Roth.
Right.
And so the distribution goes to the charity that has a zero tax rate.
That's right.
And so it's but it's very important that you not take it because it's
Correct.
going to show up on your taxes. If you take it, then we taxes deducted, taxes due, and then you give what's left.
Correct.
But this is just a way to give up $100,000 per person per year to a qualified charity, no tax on it.
Correct.
But as a result, you don't get a tax deduction, but you just don't have to claim it as income.
That's correct. So if you're claiming it as income, the higher the bracket, the more income you would lose on it. If you don't have to claim it as income, it's a wonderful tool. And especially if you were giving it anyway.
And it counts for your RMD.
Counts against your RMD, and your cash is still in the checking.
Because I hear people say they make me take the RMD out because they're worried about me, but so they can get their hands on the money.
That's right. That's exactly.
I don't need it, but I have to take it out.
That's
and that
right.
always sticks in their craw that they wish they wouldn't have to do it. This is an opportunity that you can give up to $100,000.
Yes.
And it'll count as that much of your RMD, and it goes directly to charity, 100%.
That's right.
That's great.
And again, this is hugely beneficial if you're a high net worth individual. We used to have some people at the college who gave lots of money through this tool, but it's also beneficial if you're not necessarily high net worth, but you have to take a required minimum distribution that is less than the charitable amount you're giving every year. You might as well get the benefit of not having to pay taxes, especially if you can't itemize. So it's a good tool for everyone across the board once you reach that age.
Good to be aware of.
Yes. Now, there are some of us who have reached age 59 and a half. Again, we don't know why that is. But at age 59 and a half, what happens with an IRA is I can now take money out of the account without paying the early withdrawal penalty, which has very narrow parameters to avoid. And it's a 10% penalty on every dollar you pull out. So once you've reached 59 and a half, even if it's before 70 and a half, so 11 years in there, you can still use your IRA to make charitable gifts. And it works pretty well any year, works especially well this year. I did put on the screen, however, be sure to consult your own advisors because you are an attorney. I'm not an accountant or an attorney, so this is nothing legal advice. It's a concept that
But always a good idea to talk to your tax planner because he or she's going to know your situation and the best assets. I've heard you say there's good assets to give to charity and there's better assets to give to charity, and this is one of those. Again,
could be better if it works.
Better, because it'll save taxes and free up more money.
That's exactly it. So here's how this one works. If you have this IRA, and I'm assuming it's a couple, of course, an individual retirement account is an individual account, but you can pull money out of that IRA account. And this time, instead of it having to go directly to charity, it actually can come to you. You turn around and write a check or make a cash distribution of that same amount to the ministry that you care about, represented by the cross there. And if you're itemizing your deductions, then it is in effect a net wash. I pull $10,000 out, my income goes up $10,000. I make a $10,000 gift, my income comes down $10,000. For adjusted purposes, it's a net wash. So that's another way for those who haven't reached 70 and a half.
I was going to say that the qualified charitable distributions, you have to be 70 and a half. But this is something you could start doing at 59 and a half.
Correct.
Assuming you itemize. Again, it will show up on my taxable income, but then I'll get a taxable charitable deduction that is going to offset that and allows, again, that's money that's I'm going to owe tax on whenever I pull it out.
That's right.
I might as well pull it out now. Use that to pay my tithe and my charitable gifts.
Yes.
And it's a wash if you itemize and take out that much. So
it can be very beneficial in the right circumstances. And again, Doug, I always tell people with the QCD or this strategy, not only consult your advisors, but recognize it has federal income tax implications. So there are a few little quirky things that can happen from time to time, but it's doable. I've got some friends in Indiana. When the man turned 70 and a half, retired engineer, he found out about this in a seminar. He started using it. He teaches a senior adult Sunday school class. There are now about a dozen families in this church making their tithe contributions to the church via the QCD.
If you have a charitable intention and you have these taxable assets, that's, again, our current tax code lets you make that gift from those taxable assets directly to ministries. And again, it's a benefit and it's good, wise stewardship.
I love what you said, charitable intention and wise stewardship, because one of my mentors 30 years ago in this business kind of gave us a good phrase. He said, giving is something a steward will always do, but giving in and of itself does not make one a steward. So if you think about that, giving can just be an act of, people give for lots of reasons. But those who have God's resources and they're managing them to make God look good, we are looking for these opportunities to leverage it and tax advantages can be part of that. So, all right. So real quickly on the screen, here's a chart. In 2019, in other words, pre the CARE Act, if you had pulled $100,000 from your IRA and taken it as income, the maximum you could have deducted, even if you'd given the whole $100,000 away, your maximum deduction would have only been $60,000 allowable. Now you could have carried over the 40 to the next tax year, but only 60 in that 1 year. It would not have been a tax wash. In other words, you still had 40,000 of taxable income. This year and last year, which is past for all of our tax purposes, but this year, if you pulled that 100,000 out and gave it all, you will pay zero in income taxes on it. So it is a really beautiful tool. Now that assumes it's in above the normal 60%.
Right.
So if you're, anyway, we could get into a lot of that. If you have questions about the IRA, contact us,
Yeah,
right? We'll talk.
absolutely.
Okay, good. And one last thing about your IRA. If you have, and this can work for your 401ks and 403bs and other things, all of those assets transfer via a beneficiary form. So every retirement account holder for a qualified plan, meaning it's one authorized by the federal government and the tax code, they all transfer to the next beneficiary by beneficiary form. These make wonderful assets to leave to your ministry. So if you're thinking, what should I give to my ministries at my passing? You should think first perhaps of your retirement accounts. And here's why. If you let your child inherit a retirement account that's not yet been taxed, your child will pay the tax,
Have to pay the tax
at their income tax bracket. And if they pull out a lot at once, their bracket may jump to the higher bracket. So, but if you leave it to a ministry, the ministries don't pay income taxes. And so it's a wonderful asset as you're thinking about that. It can fulfill your generosity desires. It's a really good tax benefit. And it's revocable, meaning if you change your mind prior to passing, you could just change the beneficiary form.
Absolutely.
You
And
can take that down.
similar to a life insurance policy, you just need to change a beneficiary form from the plan administrator, something you can do yourself.
Correct.
My wife and I, we were planning to give to missions and to charity, and we said, let's do it from our traditional IRA and 401k. And again, take that percentage there, because that's asset that if we leave that to our children, which was the way it was originally set up, they're going to have to pay the tax on it.
Right.
So again, we'll leave them non-taxable assets and leave these to charity.
Right. I love it. And one of the quick things we've talked about many times with individuals is, I bought a life insurance policy for my ministries, but I also have a retirement account that I'm going to leave my kids. Well, if you could reverse those, the tax benefit is better.
Yeah.
Because kids get life insurance as income tax-free.
Tax-free.
Charities take IRA assets income tax-free.
At their tax rate.
Exactly. So beautiful thing.
It is.
Yeah.
It is.
Good.
Well, this is you mentioned some historically low interest rate periods, and that actually makes some charitable gifts more attractive. Can you unpack that for us a little bit?
Yeah, so there's an inverse proportionality to the lower, what's referred to as the applicable federal rate, the AFR, which has a code section, it's 1150 or 12, whatever it is, doesn't matter. But for our purposes, it's the calculation rate that is used to figure out when someone gives a gift of a future benefit, what's it worth today? So you're figuring a present value of something that's actually going to happen in the future. Well, if you use that inverse proportion, the lower the AFR, the higher the charitable tax deduction. So in a low AFR environment like we have today, it was even lower a year ago. It's creeping back up. But in a time like this, a few of these gifts make a lot of sense from a deduction perspective. What I learned is Christian stewards are rarely motivated by deductions, but they're sure nice cherries on the Sunday, right?
Absolutely.
Yeah. So a couple of examples. Life estate agreement. So on the screen is an example of a life estate agreement. I wish I had a John Madden illustrator. I would draw circles and show you arrows and everything, show you how this works. But the bottom line is there's a tool available that says, when we pass, we would love for Ozark Christian College to inherit our house and sell it and turn the money into men and women being educated to become Christian leaders. Well, if you would like to leave a property to your favorite ministry, this tool allows you to promise to do that at the time of your passing or when you vacate in an irrevocable manner, meaning you can't take it back, so you have to have other assets to live on. But you can make that gift today, and because you make it today, even though they don't get the house until you're passing, you get a charitable tax deduction.
Because it's irrevocable.
Because it's irrevocable. You can't change it. It's like a bucket with a lid on it. You can't take it back out. But because you promise it to ministry, if you follow the money, when money goes to ministry, no taxes, right? So you get a nice deduction for that. So if you or anyone out there would like to explore the opportunity to creatively use some real estate to make a charitable gift like this, we'd love to discuss it with you. There's another tool that is very similar for your home, and that would be, most often I see this with farmers or business owners who have properties. But quick example, we were working last year and I found a farmer who owns lots of land, and one parcel of it he was able to contribute to his favorite ministry. He still gets to farm the land for the rest of his life. If he ceases farming, he can rent the land to another farmer and receive the cash rent or the share crop on it. Now he's obligated to pay the taxes and keep the fence up and do all the maintenance things that go along with that. But at his age and with the low AFR, he received an 80% charitable deduction. So for every dollar of value of the land, he got an 80-cent deduction for that, even though the transfer won't happen until he doesn't need the land.
So he's helping his favorite ministry, and he's getting a deduction now.
Yep. Which in his case, as a profitable farm operation, the charitable deduction was huge.
Yeah.
So there are opportunities to do that with life estate agreements, and again, it's a function of this concept of the AFR is historically low. I've seen it when it was 6 and 7%. Today it's 1.2%, I think. So
again, when you make a kind of a lifetime gift of a future interest, and you're calculating how much of a charitable deduction am I going to get now, that's where those rates come in.
That's correct. Yep.
Yeah.
So it's I give the gift today, it doesn't deliver till years later. So how does the IRS calculate the value of that gift?
If I'm trying to maximize my charitable deduction now, then the lower interest rates is a good opportunity.
Correct. And the chart on the screen is a quick example of what just from 1.2, which is I think where we are this month, to 2.4% AFR. So if it went back to more historical numbers like 2.4, which it had been for 6 or 8 years, if you're a 60-year-old couple and you're giving away a $500,000 property, the deduction under 1.2 is $363,000. It's only $267 if that little number changes to 2.4. So you get a bonus deduction of $96,000. Not insignificant for high income earners and people who have assets and could use deductions. And then you can see it goes up even higher as far as the percentage deductibility based upon age, because that's part of the calculation.
Part of the calculations of your life expectancy.
Yep. So anyway, that chart would give you a little example. Fair market value, charitable deduction. So any gift of property requires an appraisal by a certified appraiser who will sign the proper IRS forms. But if it's a house or a farm, you can continue to live in it. You can use it. It has great benefits for you during your lifetime. It's as if you still owned it.
As opposed to, like leaving it in your will or trusted ministry. That's wonderful. But you can get by making this irrevocable commitment now, you can get the tax deduction now and utilize that, and it still goes to ministry. No effect to the ministry either way.
Correct.
But it allows, again, a benefit for you to take that deduction.
So it's a creative way to do what you were thinking you might do anyway.
Absolutely.
And to invest in your favorite ministries. So yeah, very, very good concept called the life estate agreement. So this one's a little more in the weeds, so I'm only going to touch on this. If we were to consider our stewardship as an orchard, a fruit orchard, then we'd think a couple of things. The trees would be assets. The annual fruit crop, the harvest, I like peaches, so I picked peaches for the slide. The fruit is the income. Without trees, no fruit. Without assets or ability, no income. So with this concept called a charitable lead trust, what happens is You say, well, I really want my family to end up with the orchard because they'll benefit from that and use it wisely and so forth. But is there some way to help my ministries as well? And this especially comes into play, Doug, if you have a taxable estate. So what you do is, instead of you picking the fruit, which all of us are accustomed to, right? We all have our income, we all pick the fruit, we all do what we want to with it every year. At some point in time, either now or at your passing, you say, hey, for a period of years, I want to reverse the process. I want my favorite ministry or ministries to pick the fruit off those trees. And the concept is basically this: when the ministry has picked enough fruit that the value of the fruit they've picked equals the value of the trees themselves, then they stop picking fruit and the orchard passes to your children tax-free. I bring this up because, again, in a historically low AFR rate, this is a good environment for that. The period of years can be shorter with a lesser payout. You're seeing lots of stuff on the screen and you're, maybe understanding and maybe just crossing your eyeballs like I do sometimes. But if it's interesting to you to say, so I could give it away twice. I can let the ministries have the income for a period of years and then actually give the asset to my family. We should have a conversation about that. It's called a charitable lead trust.
Charitable lead trust, again, is, as you said, it's a period of time until you meet those deductions. At the lower the rate, the sooner you meet that requirement, the sooner the property can be transferred to your heirs or whomever.
Yep. So lower the rate, it just can really shorten it down. In the example that's on the screen, if anybody was able to see, you can shorten this down a period of a third less years if you use this low environment.
Very good.
Okay.
Low interest rates, as we know, cut both ways in that, someone who is on a fixed income trying to live off of their certificates of deposit, that is very tough sledding right now. Yes. And so are there some charitable options for people that are on fixed income needing that kind of a income on their rate of return? Any charitable options that would that they could use?
Yeah, so we'll talk briefly about the charitable gift annuity and the charitable remainder trust. Now, Ozark Christian College issues charitable gift annuities. If you're familiar with the term annuity, you know that is a rate of return based upon your age. Annuities always, the age always matter, unless you're just saying I need it for a short period of years. But if you're doing it for a lifetime, the older you are, the higher the payout. The younger you are, the lower the payout, because there's going to be more years of payouts.
Life expectancy.
Yeah, life expectancy again does all here. So if you're living on CDs, you're probably pretty disappointed with your return in the last several years, and especially as things have come to renewal. I worked for a financial institution, and we had people who had invested at a really nice historical return for a longer period, but when it renewed, it was dramatically lower, and it's concerning to them, to say the least. So if you've been living on interest rates that have gone down, the gift annuity might offer you an opportunity to accomplish, I think, three things that are pretty special. One, you can have increased income during your lifetime when you need it. Two, you can know that you're helping your favorite ministry, because we're here again, Ozark Christian College does annuities, and so that would help Ozark. And three, you'll know that you're actually doing a wise stewardship thing, and you're going to get some really nice tax benefits as well from the agreement. There are other things probably, but so on the screen, you're going to throw up a chart here that shows you some typical payout rates. So what's a CD? I didn't look today, but 1-year CD is way under 1%.
It's under 1%, and again, it's special if it's even approaching 2%.
Yeah, very special, and usually a short-term offer of some odd period of time and so forth. So yeah, so if you're age 65 with a charitable gift annuity, your payout rate would be up to 4.2%. Now I say up to 4.2% because Ozark follows the American Council on Gift Annuities rates, and that's an agency that's been around more than 80 years. They help ministries know how much should you pay to have a viable gift at the end of the life expectancy. But there's nothing says that you have to take the maximum payout of ACGA. So you might be happy with 3.5% at age 65, since you're only getting one now. you'd be, 350% increase on your rate of return. But up to 4.2. And if you look at the 2 lives category, a couple age 65 with a spouse age 68, just pulled some numbers out of their charts. It's up to 3.9%. Again, well, goodness, same age, but lower payout. But it's for 2 lives. So any 2 people will always live longer than any 1 people.
The rest of their both lives.
Actuarially, yeah, the rest of their both lives. Good way to say it. So you can go down the chart. You get up to age 85. It pays up to 7.6%. The rates actually go up to 90 off to the left there in the highlight yellow. If you're 90 or above, it's 8.6%. So if you have a parent, an aunt, an uncle, or if you yourself are any of these ages or above, the charitable gift annuity might make good sense for you. And they can contact you, Doug, about that here at Ozark for calculations.
We can give them a customized proposal based on their ages, the amount that they're considering, and it doesn't cost anything to find out what kind of returns you would be receiving. So again,
excellent.
These rates do change. So
Yep.
again, these are not fixed. They're somewhat market sensitive, but they do change.
Yeah.
So we need
occasionally.
to,
The last change, what we decided was July 2020.
usually each year in the middle of the year.
Yeah.
So.
If they're going to change, that's when it will be. So we're good through July of 22, I would anticipate, with the rates that we had up here. So,
Yep.
Okay. So the next, by the way, here's some of the benefits on the screen. Again, the fair market deduction. And you can fund this with cash, or you can fund it with appreciated assets. And there's some really good benefits if you do that as well. Anyway, fixed income for life. Some of that income is tax-free. The older you are, the more is tax-free.
So is it the principal amount if you made 100,000, basically the return of that first 100,000 is going to be tax-free?
That's correct.
And if you outlive your life expectancy, it becomes taxable.
That's right. So yeah, there's a percentage of it up to actuarial life expectancy, at which point it all becomes taxable.
Yep. But still, that's
And
several
most
years.
of you people will live way beyond life expectancy, right? So
Good, clean living.
Good, clean living, exactly right. So, but you're investing in your favorite ministry,
Yep.
so it's a good tool.
Absolutely.
All right, next tool is Charitable Remainder Trust. Just a quick story. Worked with a family. They moved from one house to another. They decided to keep the original house as a rental property, which worked out really well until the husband passed away. And sometimes if you are a rental property person, there can be challenges with that. And so for the widow, some of those challenges were just too much to bear on a day-to-day basis. I called this slide "How to Fix a Broken Toilet" because that wasn't one of her fortes. And so when the renter called and said the toilet's not working, it's a real issue. She remembered in a seminar that I had done that we talked about taking rental properties and turning them into a stream of income without the hassles of managing renters and so forth. And so the bottom line of this story is she donated that property to a charitable trust. It's called a Charitable Remainder Trust. She received from the trust income. It wasn't equal to the rental amounts, but it was equal to the net rental amounts because she was paying property taxes and expenses and insurance and so forth. So basically she got a little bit less cash, but it was in the net an easier way to get that amount of cash for her because she didn't have broken toilets to worry about anymore. At the end of that trust period, whatever remains in that account will pass to her favorite ministry. And because she promised it would go to her favorite ministry, when she was done with the need for the income, at the time of her gift, she also got a charitable tax deduction just to sweeten the pie a little bit. So it's become a great solution for her. She has the regular income. In fact, she liked the concept so much that later on when she inherited additional property, she also contributed that to this trust to make the trust bigger and her income more, and avoided the sale prices, taxes on the property and so forth. So it was a nice little benefit. So it's a charitable remainder trust, works really well if you have appreciated assets. You get a fair market charitable tax deduction. You're going to have income for life, and in this lady's case, no broken toilets to fix. And in the end, she knows it's whatever's left goes to her favorite ministry.
Absolutely. Win for her, win for the ministries.
Yeah. And who lost? Only the federal government in the form of capital gains taxes.
Yeah.
So, but some of us would be okay with that for now.
Well, speaking of taxes, understand that in the halls of Congress, they're talking about perhaps lowering the unified credit exemption for gift taxes and estate taxes. And you might just describe, if they do that, what would be involved, what that would look like for us as charitable givers.
Good. I'll do that. I threw a slide in here just for fun because I enjoy this. I would guess that there are people who are with us today in the audience from most of these generations. I can't be sure that they're mature generation people or Gen Z, but I pretty much guarantee the rest of them are in there. This is just an interesting chart from a couple years ago about the percentage of the population made up by a generation and the percentage of charitable giving given by that generation, and then just the typical amount annualized and the number of organizations they support. If you look at the mature generation, this would be my parents' generation, they're a shrinking part of the population, clearly, right? But that 8% 2 years ago was doing 1/5 of the giving.
Wow.
So you had, less than 1 in 10 people doing about $2 and $10 of charitable giving. They also gave the most amount on an average basis annually, and they gave to more organizations than any of the other generations average. So interesting for those of you who've been thinking on the call today, if you're with a ministry that, boy, we need to replace our mature givers. You're right, but you also need to honor and love those people because they love you.
Yes.
And they want to support your work. The boomer generation, my generation, we're about 1 out of 5 people, but we account for 2 out of 5 charitable dollars. We're just a big generation. We, on average, we're giving less and to fewer organizations. But right now, the boomer generation is the place to be in the charitable world because we're also retiring at 10,000 a day is the number you always hear, which means we're doing our estate planning. We're looking at what are we going to do with our IRAs, those kinds of things. So big philanthropic wave of the boomer generation right now. Gen X, again, 2 out of 10, 2 out of 5 people in the country, less giving. Why would that be? Well, for one thing, they're younger, probably still have children, and maybe trying to get them through school and
in their
college.
career. Yeah.
They haven't earned as much yet. They probably still have a mortgage, some of those kinds of things. But notice the giving goes down as the generation gets younger, as do the number of organizations supported. So the millennials, 1/4 of the population, giving about 14% of the charitable gifts to a smaller list of charitable organizations. By the time you get to Gen Z, which is the last one on this chart, again, 1/4 of the population, they're not giving much at all. So you just think about the life circumstance and what allows us to give. But there are a lot of people who are also very concerned, and I'm encouraged that you're with us today because statistically, last year, only about half of the American households made charitable gifts. 2018. Last year would have been an exceptional year. Lots of people gave money they had not been giving before. But the trend is fewer and fewer American households make charitable gifts year by year. And it started about the Great Recession, and it's continued to trend down. And worse than that is that the trend to give to the broad category called religion is also trending down. From 50 years ago, it would have been more than half of all the charitable dollars, where today it's under 30% of the charitable dollars going to religious causes. Now, there are, again, caveats to those statistics, but it's important that creative generosity become part of the conversation of our stewardship.
Absolutely.
The kingdom needs us. The people of the world need us. There's tremendous opportunities.
Yep.
Yeah. Okay. All right. What were we going to talk about?
Talk about the unified credit exemption.
Yeah.
And you were
I don't have a slide on that one.
You were going to give us your crystal
I beg
ball.
your pardon. I got to preach it. So $11.7 million this year. Any individual who passes this year can give away up to $11.7 million of their estate to other individuals without paying any estate taxes. So it's a huge number, and 99.9% of all Americans who die this year won't have to worry about that. The 0.01% who do are going to pay a lot of tax. I'm aware of a gentleman who passed away last week with tens of millions of dollars in his estate and no estate plan. Mm-hmm. And so he would be an example of it's going to cost 40%, 40 cents on the dollar for every dollar above that 11.7.
It's one of the higher taxes.
It's an onerous tax in many instances, but it is what it is. So When Congress passed a law in 2017 to index that, to increase the exemption and then index it for inflation, it has gone from 10 up to 11.7 this year. But there's a sunset on that bill, on that law. So at the end of 2025, that's going to drop down to $5 million per individual, and it will also be indexed, so it'll be something over 6. A single person who is married can effectively plan for doubling. So this year, $23.4 million could be passed to personal beneficiaries without estate tax. But the reason I bring it up is it can also be given away during lifetime. So I'm aware of a farmer who had well over 1,000 acres of farm ground valued in the millions of dollars, who used this ability to transfer the farm to his heirs because they wanted to keep the farm as a farm. And he did that during his lifetime so that just in case the tax exemption went down, he would have already completed the gift. And Congress has never been known to claw back, as they call it, a completed gift under these rules. So if you're in a situation or know those who have estates that today might not be taxable, but if the law changes or sunsets in the end of 25, they might be, then it's worthy of a conversation about using today's exemption.
So, I mean, you either, that 11.7 as it stands this year, you either use that at your passing or you can use it during your lifetime.
Correct.
Which is a gift during your lifetime. You're a federal estate when you die. He just accelerated that transfer instead of waiting until he died and maybe it goes to 5 or less.
Correct.
He knows it's 11.7 now.
Right.
And so he's making that
He locked it in today.
using his exemption. So you won't have any left over if you use the whole amount.
Right.
Any dollar you take off of your lifetime gift, that's just going to reduce what's left
Correct.
over unified credit.
It's one or the other. It's
Right.
called a unified credit because it unifies gifts and estate taxes. So yeah, whatever you use during lifetime is not there at death, but if you don't use it during lifetime, it's all there at death.
And we talk about $5 million. That's still a lot of money.
Still
Yet
a
people
lot.
have life insurance,
Yep.
millions, and retirement accounts, and the real estate.
Mhm.
That all gets lumped in for that to come up with that gross estate value. And so again, even though we think, well, we don't have that, well, again, you start considering retirement accounts, life insurance, investments, property that you own. The people are going to be getting close to that.
Yep. And especially those who are business owners and farmers, for
Absolutely.
example, those people tend to creep up a lot. Now, there's one caveat to that farmer's gift. He paid hundreds of dollars for acreage that's now worth thousands and thousands of dollars. His cost basis was a part of the gift. So if his children ever do decide to sell it, and the plan is to not, but if they ever do, they will have to pay the difference between his hundreds of dollars and whatever they sell it for as in capital gains
They're
taxes.
giving up the stepped up basis we refer
That's
to.
correct.
Yeah.
However, if they talk to us during that time, we'll show them strategies to avoid the capital gains taxes.
Right.
So we can help them on both ends of that equation. So
And if they keep it for their lifetime, then they may, assuming it's the same, they might get the stepped up basis to the next generation.
that's correct. So is that a short-term opportunity? Maybe. It certainly is short-term in a period of it ends the end of 25, we know. But will it change? Will Congress is meeting? And we don't know.
Right.
So, right. Okay.
Which 2025 sounded like a long ways off now, not
Yeah,
so much.
in 17, but not so much today. That's correct. Yeah. So the last thing I would like to do here is just throw up a couple of slides with this question, because again, stewardship matters, right? It's why we do what we do. And the people who are here, I'm guessing, are all seeking to be the best stewards they can be, and generosity is an aspect of that. I think if you look at scripture, there are two, sorry, I got ahead of the slide there. There are two 12s, Luke 12 and Romans 12, that both deal with finances in some degree. In Luke 12, you know the story of the farmer who said, my barns aren't big enough, I'll tear them down and build bigger ones. But of course, Jesus said, hey, death is coming tonight, and called him a fool. Romans 12, there's a list of gifts that are hardwired into humankind. And I think the reason we can believe they're hardwired into humankind is because Romans 12:1 starts by saying, I beg you, submit your body as a living sacrifice, which is your reasonable act of worship. So these 7 gifts that come later on in that chapter are probably part of what God put in our body, our internal operating system, if you will. Leadership gifts, mercy gifts, gifts of teaching, but one of those gifts is the gift of giving. So I encourage people, and I think you do as well, make as much money as you possibly can. Earn to your capacity, but do so with the Romans 12 mindset, that you have the gift of giving hardwired into you. And if you do, God wants you to make a lot because he trusts you to invest a lot as part of the body of Christ, to grow the body of Christ with one of those 7 gifts. If I get a chance to talk with people individually about this, I will say to them, let's just take the Luke 12, the barn builder off. You're not living the game of whoever dies with the most toys wins. But let's talk about the Romans 12 gift of giving. The evidence of that is probably the ability for you to make more than you need to live on. Okay, hand to mouth. It's hard to say you have the gift of giving. You could be generous, don't get me wrong, but it's probably at a sacrifice or a gift of worship, like the widow's mite. The gift of giving, you can answer these 2 questions. How much is enough to live the life God has called you to live? And if you have the gift of giving, you probably know what that number is. In business, it's very kind of a buzz thing for business owners to talk to you. What's your number? And what they mean by that is, how much would someone have to offer you for your business before you'd sell out and retire or sell out and move on? Well, if you've already achieved the number to live the life God's called you to live, then the second question is important. Why did he give you more than that? And it's not for the barn building business. It's not to put in barns where moths, corrupt and destroy, and thieves break in and steal. It is to exercise the gift of giving. So you live to your calling, and everything else goes into the kingdom. Perhaps it's 1 out of 7 gifts God has given church members to make a difference. So love that. Those 2 passages, you might want to study those. Creative generosity, Doug, starts because we know it's all God's stuff. We're just managers. And the better we do, the better others do, because we've been blessed to be a blessing to other people. So if you want to have that conversation, this last slide here is, well, first of all, we would like to help. We should talk about that, right? You want to offer whatever Ozark could do on their behalf?
Yeah, we just want to be a resource. I know I speak for David as well. We like nothing better than to sit down with someone and talk about different options, again, meeting what their desires are and what their ministries that they support. And so, again, have that conversation. There's no cost. There's no obligation to talk to us. So, again, both of us are very happy to visit with you and talk about the different options that present.
And we actually have a kind of a nice tag team thing, because you actually do have a law license in 4 states and are licensed to practice. And so you can help accomplish a lot of the things I can only talk to people about. So if we can help be a part of that, love to do that. We would offer you a free estate planning guide, which is a 12-page booklet that just kind of helps you put together who the people should be in your estate plan and what the property that God's entrusted to you is and what your plans are between those. And if you like, we can create a design for you. It would function like a blueprint. If you like the blueprint, you can go to a builder like Doug, who could actually make that drawing or that blueprint into an actual legal house. So it's something we'd love to help you with. Again, no cost, no obligation. And there's Doug's email address and my email address, and I'll let you wrap it up, Doug.
Well, again, I wanted to say thank you, David. You've given us a lot of good ideas, and especially the ones that have a short window. There's opportunities, always opportunities for giving, but some of these have some deadlines that you've talked about. And that it's important for us to be aware of those. So if someone has, as you mentioned, has a question or we can provide any information, we want to be a resource. Again, you've given us a lot to think about, and I know we covered it in pretty short fashion. So our email is up there for you to contact us at any time if there's any way that we can help. I just want to thank David for giving us his time and sharing his experiences with us. And again, we hope that you will take these opportunities to be generous and in these creative ways that you can bless other people. As you say, blessed to be a blessing.
Thank you, Doug.
Thank you.
Friends.